Hello there. Welcome to another episode of the Crypto Star Wars Fans channel. I am your host, Sean Lee. Now, we are in July 2022. We have been in a bear market pretty much for the better half of the year, but especially so in the last few months. Many people that know me, that are within our network, have been asking, hey, is now the right time to invest? What is the investment strategy? Is crypto assets entirely dead? Should I even look at it? And, those of you that know me, I always tell you, I don't give investment advice because I am not an investor. I don't really know much about the market. I am more on the technology. I'm on the building side, and I'm in the broader ecosystem. So today I figured I am going to bring an expert in the space, Dick Lowe, who is the founder of TDX Securities, who manages assets for high net worth clients as well as institutions and also little people like me. So I have been working with Dick and his team for a few months. I trust the various different strategies that they deploy, but more importantly, Dick and his team come from the financial services industry, and they have been in the crypto space for quite some time. So I wanted to bring him onto the show and share with myself and also others that might be watching the clip today a little bit about the macroeconomics aspects of where things are, where he sees the market going, and what are some of those sound strategies that can be deployed, which would make sense for the longer term. So Dick, welcome to the show.
Good morning, Sean. Thanks very much. Pleasure to be here.
Excellent. Hey, Dick, so maybe a quick intro about yourself, a little bit about your background, how you founded DTX, and maybe we'll just use that as a kickoff point.
Sure. Yeah, so very quick intro about myself and what we do at TDX Strategies. Personally, I've been an options trader, derivatives trader for over 20 years. So I used to trade equity options at Deutsche Bank in Australia. I came to Hong Kong 17 years ago with Deutsche Bank, where I traded structured products and exotic options. And I founded TDX in 2019, just over 3 years ago, with the support of a family office in Hong Kong. And we've also received other investors, also include FTX, Gobi Partners, amongst others. So TDX is an institutional grade derivatives and structured products platform for digital assets. We have seen the huge amount of interest from across all client segments, family offices, ultra high net worths, corporates, institutions, to get exposure to this asset class. And despite the recent correction in the markets and recent volatility, we've seen an increase in interest from new clients to get into this asset class. But for newcomers coming into digital assets, starting an investment and managing a digital asset portfolio is very much a full-time job. Right. Given the nature of 24/7 markets, the market is highly fragmented. So you're likely managing assets and trading across different platforms to trade different underlyings and different products. You have to manage your custody solutions. You might want to get access to decentralized finance, and you have to manage that as well. But for a lot of family offices who are probably looking to allocate, say, up to 5% of their total investments into crypto, it doesn't really justify hiring a dedicated team to manage digital asset investments. So that's really where TDX comes in. We provide our clients with access to a wide range of investment banking grade products and services with a private banking style relationship. We try to understand each of our clients' objectives when they come to invest in digital assets, and we customize and tailor derivatives-based solutions that can best achieve their objectives. So, we really try to be a bridge between traditional finance and crypto as an asset class, and we pursue very much a traditional approach to our crypto business and to the way we manage our investments. Both in terms of products, in terms of our risk management, and also in terms of building long-term relationships. So we've seen a really strong growth in terms of our core client base, and we'll continue to see growing, accelerating interest in increasing exposure to this asset class.
Interesting. So you're seeing increased interest despite the market, and that might sound a bit counterintuitive, but I think as most people may realize, a lot of the more sophisticated investors are always looking for good opportunities. And if there's a long-term viability to a particular space or asset class, then times like this may actually become very interesting times. Again, this is not investment advice, right? So this is just general kind of observation. But I think that's a very interesting observations, or even direct engagements that you're having with these new clients. So Dick, maybe you come from the traditional finance industry, right? And as you look at crypto today and this fairly severe kind of correction, a lot of people are like, oh, crypto has crashed, it's crashed. But I think the reality is there's a much bigger macro economics factor here, right? There's a war going on in Europe still, right? After 4 or 5 months now. And the overall economic environments and conditions are pretty not so good, right? Around the world. How are you seeing kind of the macro side and then playing into the crypto markets in general?
Look, I think we can definitely draw a few parallels between what's happened in crypto with what's happened historically in traditional markets. I mean, all of a sudden, everyone's talking about risk management as if it's something new in the crypto space. But no, obviously, risk management that's a concept that's been around since the very beginning, and I think the concept of risk management transcends beyond financial markets, and it should be present in every single business. Doesn't matter what type of business you run, you have to manage your balance sheet. You have to make sure that you're solvent. Every business has operational risks that they have to manage. And in our business, we're faced with market risk and the credit risk of our counterparties. So I think what's happened and the root cause of all these high-profile, failures in the crypto industry, implosion of say Terra and UST, the bankruptcy of Celsius Network, 3 Arrows Capital, amongst many others. I think that they've been baked with a very similar recipe to what caused financial disasters in traditional markets: excessive leverage, a lack of internal controls, governance, and in some cases potentially maybe fraud. It's very similar to what's happened with Enron 2001, right. WorldCom 2002, and more recently Lehman Brothers in 2008. So there are lots of parallels that we can draw between what's happened in crypto in the last quarter versus what's happened in traditional market. And a lot of this could have been prevented with prudent risk management, adequate internal controls. So it's unfortunate that it's happened, but I think in many aspects, and it's unfortunate that a lot of people have been impacted financially and otherwise by these events. But in some ways, we see it's in some ways it's fortunate that it's happened now before the industry has gotten even bigger. Right. And it's healthy now that we can sort of more focus on a healthy and mature development of the industry as a whole. And the other parallel I would draw would be the dot-com bubble from 1995 to 2000. Yes. I was still pretty young back then. I haven't started trading, but there's a lot of similarities. Now, during the dot-com bubble, any technology company or any technology-related company, their valuations were just absolutely insane. NASDAQ went from 1,000 points to 5,000 points. Companies that had nothing to do with technology changed their name to something.com, and their stock price would go up. And in many ways, that's kind of what happened in crypto in 2021. A lot of projects with that have buzzwords like metaverse or GameFi or play to earn or NFTs. Investors were basically throwing money at projects at very, very rich valuations, and in many cases it was difficult to see where the value proposition was. So the fact that the bubble has bursted it's painful, but I think it's necessary for the industry to move forward. Capital was not being allocated efficiently. Capital was attracted to projects that was not value generating or had little or limited fundamental value. And now the market can focus on growing and building proper businesses, value generating assets. And the market will focus on proper risk management and how businesses are run. So I think great businesses will emerge from the ashes of this financial disaster, as they did back in the dot-com crisis. Right. So to the people who question crypto industry as a whole, the crypto atheists, the non-believers, they've been celebrating this bear market and calling for, I guess, the millionth time that the death of Bitcoin and death of crypto. I think that's not very logical. It doesn't make a lot of sense to me. Everybody who invested in Chinese technology companies have lost a lot of money in the last 12 months. If you invested in Tencent Holdings, you're probably sitting on a big loss. But does that mean that the company are not producing products and services that contribute and add value to society? It doesn't. Now if hedge funds leverage up a position and lose a lot of money, say trading stocks on Apple, it doesn't mean that iPhones don't work. Right. It doesn't mean that the technology doesn't work. It doesn't make any sense. And the same goes for crypto. I think, yes, people have lost money trading in irresponsible ways, taking too much leverage without proper controls, and it's unfortunate. But it doesn't reflect on the industry. It doesn't mean that crypto doesn't work. And in fact, we're as always constructive about the longer term outlook of the crypto industry.
I cannot agree more with what you mentioned, right? I'm a little bit older. I've gone through the .com as you mentioned. I was actually in New York during the .com bubble. And working with a lot of these projects. And I remember it was so easy. You make a phone call and you've got some sort of a website consulting business, and a phone call will get you investments, or a phone call will get you a deal.
Yes.
And it was very crazy times, and we saw how fast it went up and how fast it came crashing down. And I was just in the infancy of my career, and I had no idea what all these stock options worked and everything else. And one day I'm a millionaire, and the next day I've got nothing, right? Well, turned out, for all that entire time, it was actually nothing, right? It was just kind of valuation that's on that's just some numbers. But you also mentioned another point. I've been, when I talk to some media outlets lately, I also share similar sentiment. A lot of what I'm seeing now, I also saw during 2008, 2007, right? And I was in New York, and I remember seeing, all these banks that were going belly up. And it was because of excessive over leveraging, but also products that were curious. And maybe I'll just leave it at that, right? They're products that didn't quite make sense, but it seemed like it was something, and lots of people are buying into it. And all of a sudden it becomes a thing. And when it comes crashing down, then you're right. I mean, the risk management aspect, or that measure kind of goes out the window when you're in the full bull market. And when that comes crashing down, it's painful. I think we're seeing similar things Absolutely. Right now. But if you were to invest in stock and equities back in 2008, 2009, like, for example, if anyone bought Citi at $1, Citi was one of the largest banks in the world, right? Going back, now that 10 years later, you're looking at a pretty sizable portfolio position, just looking at that. So I think it's an interesting, again, this is not investment advice, but, we seem to see history play out itself over and over again. Isn't that funny, right? It's just the same way over and over again.
The market has a short memory.
It does. So maybe talk a little bit about some of the products that you offer. I know when you and I work, obviously there are very, very risk managed products that you were introducing to me. There are also, products that help you slowly accumulate. Like we always talk about dollar cost averaging, but most people don't do it. You've got a systematic way of doing that. Maybe some introduction about some of those products.
Sure. I mean, I mentioned we take a very traditional approach to crypto, which is very non-traditional asset class, given the way it moves, the elevated levels of volatility. And obviously that's very attractive to traders who are very aggressive. You can take big leverage on a very, very volatile asset class, and you can make a lot of money very, very quickly. And vice versa, you can lose a lot of money very, very quickly if you get wrecked by one big market move. So we're taking a very traditional approach. We're not here to hit the ball out of the park. We're not here to try to make our clients 100x of their investment. I mean, they can do that in many different places by taking leverage and taking a leverage directional bet. But that's not why we're here. We're here because we believe in the industry. We believe in the use case and solutions provided by blockchain technology. We believe in the investment thesis of Bitcoin as a store of value, a decentralized store of value, unlike the US dollar, which is currently running at an inflation rate of 9% with unlimited supply. We believe in the investment case of ETH as currency in decentralized finance, and we believe in decentralized finance and the countless solutions that it offers, and how it may revolutionize the way we do business and we do finance. But obviously, this is an emerging asset class, so we need to be cautious in our approach in terms of accumulating or growing our exposure. So basically, tapping into our experience from traditional markets with the different types of derivatives and structured products that can achieve different objectives for clients. So for example, we have more conservative clients who want to take a really, really safe approach. They don't want to have too much exposure at the moment. We have some very, very safe income-based products where the product pays a small fixed coupon. It's not 20, 50, 100%, which is unrealistic, which was previously offered by numerous lending and borrowing platforms. No, we pay a fixed coupon of maybe 2-3%. But if the price of Bitcoin appreciates above a certain level, you get appreciation, you get participation in the upside. So it's very, very simple, very, very old school structured product, fixed coupon plus a call on the upside. So, for investors who park a lot of their funds in a fixed income product, what's the worst thing what's their worst fear? The worst fear is missing out on the upside, right? So it's nice, it's safe, you're getting a fixed coupon, but if the market goes up, you feel like, oh, I've missed out. So the product kind of gives you the best of both worlds. You're getting a small fixed coupon, not very, very high, but you're getting a yield on your idle cash. But if the market does explode on the upside, you're getting participation in that. You're not going to miss out completely. You get participation. So that's been really popular for a lot of our very conservative clients. And I also mentioned earlier that we're seeing a lot of new interest from new clients after seeing this big correction in crypto, looking to start to build exposure, start to allocate a part of their portfolio into Bitcoin and ETH. And we've got this product. Again, we've taken it from traditional market. It's called an accumulator in traditional private banking. We've modified it so it's more crypto friendly. So it has a much shorter tenor. There's no leverage involved. So that you won't get wrecked from trading this product. But how the product works is basically the client may have a target to accumulate a certain number of Bitcoin or a certain number of ETH. So they can enter into this accumulator product, and they will be able to purchase a fixed number or fixed unit of BTC every single day at a fixed price. And that price is set at a discount to the prevailing price. So for clients whose view is basically, I don't know where the market is going to bottom, but I think it's a good time to start accumulating. We've been helping clients to basically accumulate little clips at different price points. So as the market comes off, we've been accumulating BTC for clients from all the way from 28,000, 25,000, 20,000, even 18,000, 17,000. And that sort of averaged out nicely to give you a pretty attractive entry level if your goal is to accumulate. No one can tell you exactly where the bottom is going to be. You can keep waiting and try and buy all in one go at the bottom, the very, very bottom. But we don't have a crystal ball. We don't know where that's going to be. We think the macro environment is very challenging, as you mentioned at the beginning. The conflict in Ukraine and Russia is ongoing with sort of no resolution in sight, and that's affecting the supply side and causing supply side inflation on energy and food. Very, very difficult to solve. We're seeing inflation spike across the world. We're seeing central banks around the world having to raise interest rates quickly, and likely they have to keep them there to bring down demand, to bring inflation down to an acceptable level. So we don't know how that's going to play out because this is really uncertain times. Having interest rates staying higher for longer in an economy that's used to cheap money, that might not be an orderly transition from easy money to high interest rates. And that's going to affect markets globally. That's going to cause volatility in the crypto market. So we don't know what's going to happen. There may be more downside. There may be another leg down. We don't know. But what we do believe is in the long-term outlook of BTC as a store of value, ETH as money in decentralized finance, and a few other altcoins who have good value proposition. And we believe gradually, cautiously accumulating through derivative structured products is a good way to play, a good strategy to build out exposure.
Very sound advice. I think, we don't unfortunately hear enough of advice like these, but rather, you turn on YouTube, and I'm not picking on anyone specifically, but all you see is buy low, buy low, buy low. This is the right time. It's just I'm so sick and tired of seeing those things, especially ones that are not coming from investments and trading professionals that have seen the markets both up and down, and have the right strategy to do so. So I wanted to thank you for sharing some of those sentiments. And I know you publish a blog, right? Every very frequently, giving updates on the markets in general, and also some of the sentiments. So if you don't mind, maybe I'll link to your Medium blog in the bottom, and then others that may be interested can follow along as well.
Please do, please do. And also not giving financial advice, but we just like to share our thoughts on what we're seeing in the markets, both traditional markets, macro backdrop, how that might play out, how it might affect crypto, what opportunities we're seeing. And we also try to be sort of very risk focused in our approach. Like oftentimes when we think that the market may be a little bit frothy or toppy, we'll suggest some ideas too in terms of downside protection, how to hedge our portfolios. So so please do, please share the link, and welcome anyone to come and take a look. It's just my personal opinion and some views and some ideas. Happy to share and discuss.
Excellent. Thank you so much, Dick. Well, it's been great to have you on the show. I am really glad you and I finally get to do this. We've talked about this for a couple of months now. I actually think this timing is even more prevalent to have this conversation specifically around kind of sound strategies and more importantly around kind of the risk management aspect and that mentality. I think it's actually even more relevant conversation to have right now than perhaps even 3-4 months ago when you and I first talked about maybe jumping onto the podcast.
Agreed.
So thank you again. I'll look forward to seeing you again soon, and thank you for coming to the show.
Thanks, Sean. Absolute pleasure.
All right.
We'll speak again soon.
Thank you, Dick.